This is week 6 of investing every week in the stock market. I started this series as a way of documenting my stock market journey to increase transparency online, and maybe if someone gets motivated to start investing or stay consistent, that would just be magnificent. This week we have around $300 something to invest, $276 in my non-registered, plus some extra money that I received through dividends throughout the month. We also have some money in my crypto account that we'll get to later. My first buy, as always, is going to be in the S&P 500. This is an index that tracks the 500 biggest companies in the United States of America. Tech companies, banks, manufacturing, anything that you can ever imagine is included in the S&P 500. And as you can see, this has been up 37% throughout the last year. If you look at the 5-year chart, it's actually up 100%. I like this ETF, VFV, from Vanguard in particular, since I started with this and it's been good for me, but you can invest in any ETF that you like. Historically, this has returned 10% on average over the last 40 years, and I think it is a good bet for the future as well. So I'm gonna go ahead and place an order for 1 share of the S&P 500, and there you go. My next buy is going to be in the NASDAQ 100 through this ETF called HXQ. The NASDAQ 100, much like the S&P 500, tracks 100 of the biggest companies in the US of A. One thing to note is that this is extremely tech focused because the biggest companies in the world happen to be tech companies. If you think tech is not the future and is not going to add value moving on, this might not be the best option for you, but I do think technology has a lot to offer, especially in future looking industries like AI. So I'm going to place an order for 1 share of the NASDAQ 100, cue the order, done. My next buy is going to be in a leverage all equity ETF, particularly HEQL. There's 2 elements here. The first is leverage. Leverage adds on to your returns, but also has some negatives. This ETF HEQL that I like in particular is 25% leverage. This means if the underlying holdings go up 10%, this ETF is going to go up 12.5%. The opposite is also true though. If the ETF goes down 10%, this is going to go down 12.5%. You can see the pros and cons here, but for a long-term investor like myself, I do think leverage can add a nice boost in the portfolio gains that I have. A risk, but a calculated risk nonetheless. 1 share of HEQL, cue the order, done. I've actually forgot all equity means that this holds not just the US market, but the Canadian market as well as some international exposure. One thing you might notice with my portfolio is that it's very US and Canada centric, so this is my way of getting some international exposure as well. My next buy is going to be in a covered call ETF tracking the S&P 500, particularly with this ETF called HYLD. Covered calls are extremely controversial online in investment circles since they sacrifice some long-term potential growth for income now. So why do I invest in covered call ETFs? The main reason for me is motivation. For a long-term investor like myself, I'm not going to realize most of my gains until I sell stock later on in life. Investing some money in covered call ETFs, getting that income now and seeing that income deposited every month in my account motivates me to keep on saving and keep on investing. And as you'll see, I'm only going to buy 1 share, so it's $14, but it's a good motivating factor, at least for me. So 1 share, submit the order, done. My next buy is going to be in a covered call ETF tracking the TSX 60, particularly this ETF called HDIV. Investment philosophy is extremely similar to HYLD. I want to see some of those gains from the TSX 60 or the Canadian S&P 500 realized now to keep me motivated to invest. This also has some exposure to US financials, which I think is going to be a solid industry in the future, so it's a double positive for me. And as you'll notice, this hasn't performed badly over the last year, up 18%. Of course, the TSX 60 is up 20 something percent, although this does have a yield of 10%, so an astronomical yield compared to the TSX 60's yield of less than 4%. And as you'll notice again, it's only 1 share, so not that much money, just that motivating factor again. My next buy is going to be in Ethereum, a cryptocurrency that is the 2nd largest in the world. I particularly like Ethereum because it has a very strong ecosystem. And what I mean by that is that there's a lot of companies building on the Ethereum blockchain and trying to solve problems in dinosaur industries like finance, regulation, and other industries as well. By buying Ethereum and particularly staking Ethereum, I get some rewards for validating transactions on the blockchain, although the bulk of my return is still in the price of Ethereum. Since cryptocurrency is extremely volatile, I do not spend much money buying it, although I keep on adding gradually, and this week we have $50 that we're going to invest in Ethereum. So I'm going to cue the order here, done. So that's it. Those were my buys for week 6. If you enjoyed this transparency and want to follow along, please hit the subscribe button and the like button. Every subscriber helps get this video to the right people also interested in learning more about finance, how to invest, and how to save more. See you next week.